Okay. All right, so I don't normally do this type of thing, but I thought it was important, and I don't know if anybody's going to listen to me, but I don't really care because I want to put this information out there. I try to make videos that are educational from an economic standpoint, what's going on with the economy and how that impacts real estate and ultimately impacts you. And um, yesterday, the Biden administration put out their tax plan for the 2024 budget, and there's a few things in there that really struck me that I wanted to share. And this isn't meant to be political; it's just factual. But I thought that you should know what is going on if you're not paying attention to the news. Um, some of the things that are in here are would have a direct impact. Some of the things would have an indirect impact, but they impact all of us, regardless of how much money we make. So I just want to run through a few things. So first, the first one I want to point out is they want to quadruple the stock buyback tax that was implemented as a part of the Inflation Reduction Act of 2022. They want to take it from 1% to 4%, so 400% increase. Um, the Inflation Reduction Act was passed in 2022, and this was a new tax that was introduced for the first time in that bill. What it is well, let me first tell you what a stock buyback is. When a public company wants to increase their shareholder value, which is their main objective, by the way, a public company has to do what's in the best interest of the shareholders, ultimately to increase the value of the shareholders' investment. And there's a couple of ways they can do that that are outside of the performance of the company on its balance sheet alone. The first is they can pay a dividend, which is basically like paying interest on the stock that you may own. The second way is a stock buyback, where they become a buyer in the market for their own stock. And we all know that the more buyers there are for something, it drives the price up. So when a corporation or a public company does a stock buyback, the share price increases, which benefits the shareholders and isn't a taxable event for them, like a sale of the stock or a dividend payment would be. Um, the 1% tax was implemented on the corporation side. So when they buy back the stock, they have to pay a 1% tax to the government on the stock that they buy back. And they want to take that from 1% to 4%. May not seem like a big deal to you, but ultimately, things like this end up hitting your pocketbook. And the best example I can give of that is you may not be a buyer of oil in terms of a barrel of oil. You probably have no use for that. However, you probably go to the gas station every few days to fill up your car. And when the price of a barrel of oil goes up, so does the gas at the pump because the gas at the pump comes from the oil. So, in the same way, any new corporate taxes ultimately funnel down to the consumer of their product, and it may be several layers that it takes to get to you, but it does hit you. And when we're talking about a new tax that was just introduced last year, and now a year later they want to uh, multiply it by 4 times, that's a significant signal. And again, all I'm doing is pointing out the facts. These are uh, notes straight out of the Tax Foundation's analysis of the budget proposal. So this isn't like editorial. This isn't my opinion. This is just the fact. The next thing I want to point out is a 25% billionaires minimum tax on unrealized capital gains. I'm not a billionaire. You're probably not either. And regardless of whether you think they pay enough tax or not. My concern about this is that it sets a precedent that could ultimately filter down to common folks like you and I. The concept of taxing unrealized capital gains is unfathomable to me because first of all, I don't even know how they would monitor or make that work in a justified way. If you own a stock and the price of that stock goes up, you have an unrealized gain until you sell that stock because the stock may go up and it may go back down, and you only make or lose money when you sell it because it's going to fluctuate, right? So How then, if the stock price goes up and I haven't sold it yet, are you going to tax that gain? Because the next day it could go down and I could have it at a loss, but now I've been taxed. Just doesn't make sense. There's no way that any of this is going to fly, by the way, because the Republicans control the Congress. They're going to shoot this down and hopefully come to a compromise that makes sense. Um, but again, regardless of whether or not this stuff passes, it's important to know what your administration is putting forward, because it signals what their long-term plans are. We have an election coming up in 2 years, so it's important to understand what what they want the future to look like. And increasing taxes in these ways is just kind of unprecedented. Um, the third and final one I want to point out, which is probably the most important and most impactful to people like you and me, is the removal of the 1031 exchange tax exemption. 1031 exchange, or a like kind exchange as it's often called, is a event where you own a piece of real estate and you sell it for a profit, and you now take that profit and you roll it into another piece of real estate that's similar in like kind. So if you do that, you can use the 1031 exchange to avoid paying capital gains tax on those profits, because you've now reinvested them in a similar asset. Biden administration wants to get rid of that exemption. They don't think that it's fair that real estate should have a loophole, is what they call it, when any other asset you sell for a gain, you're going to pay capital gains on, and they don't think that real estate should be exempt from that. The only problem with that line of thinking is the 1031 exchange and other tax incentives that are designed to encourage people to invest in real estate, they're there for a reason. If you read Tom Wheelwright's book called, I think it's called Tax Free Wealth. Tom Wheelwright is an accountant by trade. He's also an author, and he is the accountant of Robert Kiyosaki, who wrote Rich Dad Poor Dad. Tom Wheelwright's got a whole bunch of resources that you can check out if you're interested in paying less taxes legally. Anyways, his book says, and he says that these what are referred to as loopholes aren't actually loopholes. What they are is designed incentives to encourage people to invest in real estate and development, because it's cheaper for the private sector to do it than it would be for the government to do it. And it has to be done as the population grows and it moves. Development's just a natural course of progress. So either the private sector's got to do it, or the government's got to do it, or option C is nobody does it and things are a mess. If you've ever been in a city that's booming and the roads haven't caught up yet, you get an idea or a glimpse of what I'm talking about. That's kind of going on in Wake Forest, where I live right now. Tons and tons of residential growth, no progress whatsoever on the infrastructure. It's super frustrating. So that's a sidebar, but it is cheaper for the private sector to develop than it is for the government. Therefore, the government places incentives to encourage folks to do that, or companies and individuals. And 1031 exchange is probably the most common and taken advantage of portion of the tax code when it comes to real estate investment. They want to get rid of it, and they want to get rid of it to put it on parity with other investments. The only problem is when you buy a stock or you buy a different investment, that's not helping the greater good. When you develop a piece of real estate for a purpose, that is. So they're not on parity in terms of investments. And, they tried to do this last time. They tried to do this as a part of the Inflation Reduction Act. It's been on the ballot throughout history to get rid of the 1031 exchange throughout recent history. On the left, they have tried and tried, and thanks to your realtor lobby, it hasn't been able to fly. They've kept it in, and it's the realtor lobbies that fight against these changes in the tax code. So you want to understand what the value is of a realtor, or the realtor's trade in general. A big part of it is going to Capitol Hill and fighting against tax changes that affect you and me and our ability to own and transfer real estate. So obviously these things struck a chord with me. Again, I don't think I certainly didn't intend to be editorializing anything. This is just straight out of the Tax Foundation's website. A little bit of analysis and commentary, but I'm pretty sure everything I have said here today is true. Feel free to debate me though. Um, and there's no doubt that um, we have a deficit as a country that needs to be addressed. Um, it can be debated what the best way to go about that is, in terms of whether it's increasing revenue or decreasing spending or a combination of both. Um, but I think that some of these things set a pretty dangerous precedent and move us in a direction that is going to be pretty hard to reverse. So I encourage you to get educated. I know even a lot of my friends, they don't like to watch the news. Some of you probably listening don't like to watch the news. It's depressing. It's bad, and a lot of it I agree with you. But it is important to be informed. Um, if you're gonna participate in this country and the future of it, then you should take it upon yourself to be informed. So this is my little effort in doing that, and I plan to be a little bit more active in this way going forward. Just with news that's going to impact the real estate business, and a little bit of analysis to keep you guys informed. Just do my part. Whether anybody listens to me or not makes me feel better. So yeah, hope you got a little bit of education today, and have a great day.